A number of joint letters have come out for the financial institutions warning them about the risks of cryptocurrencies and digital assets specifically.
When you say that you're researching, are they coming to you asking you specific questions? Are you trying to stay ahead of it? Where is that conversation starting?
So a little bit of both. So we do broad education on the industry, but then we've got specific clients that we're helping develop digital asset solutions for their marketplace. So for their customers, for their members.
Okay, and what type of you go into a little bit about what type of products?
So most of those products are buy, sell, and hold, mostly a custodial relationship through a third-party vendor. We're starting to look at self-custody solutions as well, but the entry point for banks and credit unions are coming up with a buy, sell, hold solution so that those customers' deposits aren't going out to the Coinbases and the Krakens of the world. They want to maintain that relationship and maintain that revenue that they're missing out on today.
And I think it's also an area where we're starting, as it progresses, understanding blockchain and how that impacts the financial institution, even from back office efficiencies, and being able to minimize costs and speed up transactions in real estate. You know, if there's a real estate loan, it can be done much quicker, less intermediaries, all out in the open banking. And that's really impactful. It's impactful for the financial institution, but it's also very impactful for the consumers and everyone in that ecosystem.
How do you see the banks and the institutions managing risk right now with the FTX, all the issues that have popped up? What appetite have you seen contract, expand?
Yeah. So the risk is really one of the things that's been addressed a lot by the regulators. So we've seen a couple of joint letters from the OCC, FDIC, and
NCUA.
NCUA, Treasury. A number of joint letters have come out for the financial institutions warning them about the risks of cryptocurrencies and digital assets specifically. In the case of banks, they have not been permitted, but they've been highly discouraged from getting involved. In the case of the regulator of credit unions, which is the NCUA, they've been much more supportive. But from a risk standpoint, it's really looking at the third-party vendor relationships, because most of these financial institutions, particularly if you're a Tier 2 or Tier 3 institution, you don't have the staff, you don't have the knowledge to create your own custody solution, your own trading solution. You need to go to the likes of a NYDIG or a Cryptify or a BAC to roll out those sorts of solutions. From a bank or credit union standpoint, to manage the risk associated with that, is looking at that vendor relationship and all of that vendor's third-party relationships to make sure that everything is buttoned up from a due diligence standpoint. When we conduct a due diligence, we do an RFP. We've got 175 different RFP questions we're asking those vendors. Everything.
Yeah, you have to give me and the audience RFP. What do you mean by RFP?
Okay, request for proposal.
You have to take it all the way down.
Yeah.
So request for proposal.
So request for proposal. So when you've got a bank or credit union looking at partnering with a provider to provide, say, digital asset solutions to their customers, they're not going to do that directly. They're going to do it via a vendor. So they will conduct a request for proposal. They'll send that request out to a number of different vendors. All those vendors will bid on that opportunity.
Hey guys, thanks for watching. We had a great time here at Consensus. At the Texas Blockchain Council, we are striving to be the nexus between traditional industries, banking, finance, legal, energy, and the digital asset industry. So we want to help you get your brand in front of those kinds of companies with B2B opportunities. Reach out to us if that's of interest for membership or for sponsorship at the summit. Hope to see you there in November in Fort Worth. Thanks again. We look forward to seeing you at the summit.